Hi everybody, welcome to my question and answer video. Let's get to it. Cody, I lost my entire portfolio of $200,000 in the markets. What did I do wrong and how do I come back? All right, I'm really sorry that happened, and to hear that, this is one of those things that if you're not careful, you'll never come back from. On a positive note, this has actually happened to some of the best investors in the world. From what I understand, Jim Rogers originally invested and lost his entire portfolio. If you look at some of the original market wizards, several of them had lost an entire portfolio before they turned around and ended up becoming masters of the market. So just hang in there. This can be pretty tough. I do have some ideas of what happened and we'll talk about it. Okay, so what probably happened, since you said you lost your entire portfolio, I can tell you already you over position sized. Position sizing decides how much of your portfolio you risk on any given trade or investment. In position sizing, there's a science behind it. It's a fascinating science. It's a very mathematical sort of thing in which you have to understand what your system is capable of producing in terms of profits and losses, and you need to position size to protect yourself for the worst possible loss scenarios with your system. And you can lose heavily either because the market gets away from you and it blows through your stops, or you can lose very heavily because your system goes through a long losing streak. Okay, so you lose many trades in a row, for example. So position sizing is incredibly important. You have to be able to manage the downside, and you use that best with position sizing and to some extent your exits. Okay, so position sizing is really key here. If you lost all of your money, it is because you over position sized, and it's probably because you weren't trained to look at it. I actually learned from one of my mentors that only 1% of traders and investors that are active in the markets actually understands position sizing. It's very, very common for people to make those mistakes. So to fix that, I would recommend you read the book, The Definitive Guide to Position Sizing, 2nd edition by Dr. Van K. Tharp. As far as I'm concerned, it's the best book on the subject. I think it's fantastic. It is a thick book, it's expensive, but it's absolutely worth every penny you'll invest in that. I recommend you get that book and you study it and understand it very thoroughly. In addition, Van Tharp has a position sizing game that can go with the book or not. It's also expensive, but I do recommend that you do study that material. I think Van Tharp's work on that is the best in the industry. Now, unfortunately, Van Tharp passed away a few years ago, but his trading institute is still up and running and they still provide great training. I'm not affiliated with them at all, other than I respect the work they've done. I do want to say this about position sizing, is that you can have a very profitable system, and if you over position size it, you're going to lose everything. You can have practically a holy grail system, no exaggeration, and if you over position size it, you're going to eventually lose everything. It is just how the math works. That's how powerful position sizing is. If you have a marginal system and you properly position size it, you will get rich eventually, believe it or not. So position sizing is that powerful. It can be the difference between success and failure. Now, if you have a holy grail system and you properly position size that, then you'll become super wealthy. It goes both ways, of course, but position sizing is a powerful thing that, again, I would really recommend you understand that better, because that's the real reason you lost your entire portfolio. You had something wrong with your position sizing. You must have over position sized. Okay, so another factor is very possibly connected to the first, but it's very possible you had an unprofitable system. In other words, the system on average would lose money over time, or commonly referred to as a negative expectancy system. To be able to fix that, you actually have to understand how to design systems and how to backtest them to verify that they are actually profitable, and how to test them live in the markets with tiny position size to verify that they're going to be profitable before you start to size up in the trading system. Okay, so it's super important you understand that as well. So another book I'd recommend, I'd actually recommend 2 other Van Tharp books because they're very good, would be Trade Your Way to Financial Freedom, helps you kind of design your own system, and also Trading Beyond the Matrix, both by Dr. Van K. Tharp, will help you understand trading better and investing better and give you some skill sets that you may not have before. You use kind of those books to help as a guide to help you design profitable systems. It can be very helpful. It's a long journey, but there's a lot to it. In brief, I would like to add this real quick. There's 7 parts to a system, and this is real broad, and you could zoom into this much more detail. There's 7 parts to a profitable trading business, so to speak. And the first part is your own psychology, which is going to take a lot of work. I would recommend that Trading Beyond the Matrix book. That's actually very good for your psychology part. Now, I want to warn you that Trading Beyond the Matrix is a little odd and different. If you're not used to that at first, remain open-minded, and you'll actually start to see huge value in it as the years go by, as you focus on this career. I promise it's one of those slow burn kind of things that takes a while for you to truly comprehend everything that's talked about. But as the 7 major parts, the first one is your psychology. The second one is your position sizing, super important. The third most important part is the market you're investing or trading in. So that could be stocks, it could be futures, it could be commodities, whatever it is. The fourth is your market conditions. So what condition that market is actually in is super important. Fifth would be your exit or your management strategies for your investments or your trades, very important. Sixth is the transaction cost and how you manage those. And the seventh and least important factor out of these 7 is your setup and entry strategies, how you get into a particular investment. Believe it or not, the vast majority of people focus majorly at the least important factor of these 7, and they never actually get to the other 6 very well. And so that's the main reason they're actually not very profitable, is because you have to get all 7 of these right in order to be truly profitable in the long run. Once you understand all of these aspects and you understand all of this training, then I would recommend coming back by starting with back testing your system. Start with a tiny position size in the market, verify it works and it's profitable over time, and then expand your position size. And that's how you come back from a terrible scenario like this. So I'm really sorry that happened to you. I really hope you the best and good luck in the future on this journey. It's, as they say, it's the trader's journey or the investor's journey. It's pretty tough and it's fraught with this kind of stuff. Again, the good news is there's been a lot of great masters who started off this way, and it can be one of the best training grounds to actually have a bad drawdown like that, so to speak. So if this video was helpful to you, please click that like button and subscribe. I appreciate it, and thank you for watching.